So, dear colleagues, today is Friday, which is the final trading day in the financial markets for this week, and I would like us to take a closer look at the market from the perspective of wave analysis to gain better insights into current trends and potential future movements. Let's begin our discussion by looking at the currency market. This week we received significant and important news from the Fed. That was on Wednesday. It's really very important to keep a close eye on this news. Typically, immediately after significant news breaks, trending markets often begin to emerge. The market reacts to various news events, moving both up and down, which helps in determining its overall direction, and then as a result, trends usually begin to establish themselves over time. Summary, let's examine the changes in the euro-dollar. On the euro-dollar daily time frame, a five-wave structure is forming upwards, followed by an ABC correction in the opposite direction. After that initial movement, we observe the first impulse wave, followed by an ABC correction pattern. A level plus a Fibonacci retracement up to 38.2% is forming, along with an additional significant level. Following that initial movement, there is a bounce from this lower level that rises upwards, which is then succeeded by a breakout. This breakout excites wave traders and motivates them to attempt purchasing during the breakout of the anticipated third wave, aiming to capitalize on potential gains. And here is where it truly gets interesting. We have significant news set to be released right at the breakout of this maximum threshold, and then the market begins to turn downward. What does this indicate? This suggests that the market is likely not fully prepared for the anticipated third impulse wave just yet, and consequently, there may still be some additional correction downwards or a further downward movement before any upward trend can begin. For me, this particular model is identified as a false breakout level on the daily time frame analysis. The longer the time frame considered, the more effectively the false breakout levels tend to perform and influence market movements. Accordingly, the euro may still continue to decline against various currencies, and based on all the recent news and updates from the Federal Reserve, we are not ready to increase interest rates or take a more aggressive stance just yet. So, as a reminder, I maintained long positions on the euro at the start of the week, and yesterday we began selling off euros and subsequently closed out the buy positions we had previously established. Let's take a closer look at an even lower time frame, specifically the detailed 4-hour chart. On the 4-hour time frame, we observe one clear impulse followed by two notable corrections, then three distinct impulses, culminating in a significant channel breakout. We have already started selling. This could either be a wave 4 or a market reversal based on the daily scenario. Overall, I am actively trying to sell the euro currency for various financial reasons. The maximum time frame I allowed the market to demonstrate growth was when I held long positions consistently throughout that period. At the beginning of this week, we had established long positions here, and we successfully held onto the growth. Additionally, with the Federal Reserve's recent actions, the trade moved into a solid profit of $800. However, during the Fed meeting, we encountered a downturn and subsequently decided to pivot downwards. Guys, this situation occurs quite frequently. There are times when significant news is released, causing the market to reverse its trend, and during those moments we need to promptly close those existing trades and initiate new sales. Alternatively, there's a second scenario where the market moves favorably in our direction following the news. It won't always be this way. The news cycle doesn't always work against us and can sometimes bring positive change and hope. There will be periods with upcoming news, the next Fed meeting, when the market will move in our direction. Therefore, it is very important to maintain your trading strategy and continue trading, even if the market doesn't go according to our scenario. However, overall, the third wave has nearly completed around the 161.8 level, so I'm currently attempting to sell the euro, which unfortunately means that nothing was earned during this week. If someone closed their profit here, that's great, but overall the market turned quickly, and the Fed has generally reversed the entire currency market. The primary task at hand is to minimize any potential loss of money as much as possible. Given that we are engaged in short-term trading, I am confident that the market has experienced significant fluctuations, rising and falling quite a bit. On the IM15 and 5-minute charts, it is quite possible to incur losses. However, since we are trading based on a 4-hour time frame, our strategy to buy here and sell there allows us to break even effectively. Those who bought euros at this specific moment made an incorrect entry point in the market. Guys, you can't simply buy at the market highs just by following my market overview, as unexpected news can emerge and reverse trends, potentially leading to significant financial losses. Those who diligently follow my wave analysis typically find that they end up breaking even, securing a small profit, or experiencing only a minor loss if they decided to buy at this point. But overall, it should ultimately work out just like that. That's why beginners often find themselves in situations where they enter a buy here, and then news reverses, causing them to lose money. In our specific situation, everything concluded successfully without any losses related to the euro-dollar currency pair. Next, we'll discuss the dollar-franc instrument. For the dollar-franc currency pair, we currently have an active buy position open, and at the beginning of this week, I had previously opened a sell position. But again, the Fed reversed everything, and we started buying yesterday. The overall market structure here is 1 impulse, 2 correction, 3 impulse, 4 correction, 5 impulse in a downtrend. The fifth wave has updated this minimum value, indicating that it serves as a continuation of the fifth wave. As soon as the market breaks through this established channel, an ABC correction could potentially begin, signaling a shift in market dynamics. This downward movement consists of a series of 5 distinct waves, while the subsequent upward movement can be classified as an ABC correction pattern in technical analysis. Therefore, I am currently watching for a correction to buy in the dollar franc. On the 4-hour time frame chart, we observed a clear downward trend consisting of 5 distinct waves down, followed by an additional sequence of 4 identified as 1, 2, 3, 4, and 5. In principle, the 5 members can conclude their discussions here. The third was the longest. 1 and 5 are approximately the same size according to the rules, and this movement is probably the start of wave ABC. So this will be a market correction, and that's why I'm holding on to my buy positions for the dollar-franc currency pair. No sales are currently happening here at all. The Fed has turned all markets around, absolutely all of them. For those actively trading in the global currency market, I believe everyone has certainly noticed that the performance of this market relies heavily on the dollar. Wherever the dollar travels, everything else shifts in tandem, and this transformation occurs simultaneously. That's precisely why we actively trade currencies, as reversals are occurring in many markets everywhere. So I'm holding my buy position and working on the ABC correction. Also, for those in my closed channel, we sold the dollar franc here and bought it here yesterday. So essentially, you're flipping to a buy position, securing a small profit in the process. For those who chose to sell their assets here once more, you are undoubtedly losing money. That's why you should always enter the market cautiously, using short stop-loss orders for better protection. Here was the crucial stop, and the exit point was at break-even, resulting in a small profit overall. This is very important. There will often be such reversals and market turnarounds over time. Typically, this situation occurs in the news cycle, and it's crucial to enter at optimal entry points, avoiding lows and not jumping in right here, folks. Here, entry points are for losing traders. They will trade at a loss over time. The Canadian dollar, guys, let's take a look at it today. So, the Canadian dollar has also seen a reversal. The Fed has turned everything around, and we exited sales and opened buys on the Canadian dollar. Here we present the overall structure consisting of waves 1, 2, 3, 4, and 5. Following the fifth wave, we observe an ABC correction. Notice, by the way, we are forming such triangles. Notice the 2 triangles. The previous triangle pattern broke upwards decisively, and then another similar triangle formed. Most likely we will see a comparable movement soon. This will be considered the initial triangle labeled as 1, followed by triangles 2, then subsequently 3, 4, and 5. Ideally, a comprehensive 5-wave model may soon emerge for the Canadian dollar in the near future. I expected at the beginning of the week that the Canadian dollar would break through this triangle, establish itself outside, go down, and this should have happened at the Fed meeting, but as you can see, my expectations were not met. The market reversed at the Fed, and it's time to close sales, guys. It's time to try buying the Canadian dollar because the news itself turned all the markets, including the dollar. The 4-hour time frame presented here reveals a somewhat different market structure compared to other time frames. Remember, we carefully analyzed 1 impulse followed by 2 corrections. Then we attempted to sell here at the beginning of the week on Monday, setting the stop loss right here. Then we gave the market time, the market fell, and we had a profit of about $600, but we didn't close the trade here. I typically don't see the value in closing small profits since I anticipated a drop to about 16.18. Then the price bounced off the lower boundary of the specified level, resulting in 3 distinct bounces along with the Fed's involvement. And the Fed turned the market around, and most often the Fed's reversal signals a new trend. If the price rises above this second wave now, it will signal a new upward movement in the market, and the ongoing correction will transition into more of an impulse phase, allowing us to confidently consider the overall market as being in an upward trend. That's why, regarding the dollar against the Canadian dollar, we also exited at break-even. Those who sold here bought here, and now we are working on buying. I believe that the Federal Reserve has effectively completed its responsibilities, resulting in a shift in market trend direction. Therefore, for the time being, with a profit of $136 in hand, we will patiently wait for the upcoming trading week to unfold. Let's move on. Let's take a closer look at the current trends in the gold market. Here, guys, we are looking at the daily time frame chart. Here, the initial impulse wave is forming, followed by an ABC structure for the second wave, and then we observe a three-wave upward movement. And now, of course, the main question is, where will the third wave end? In general, the third wave in this context typically consists of a total of 5 distinct subwaves, allowing us to count sequentially as 1, 2, 3, 4, and finally 5. So in principle, there are a total of 5 distinct subwaves. I would like to see a clear breakout from this channel that would lead us towards a correction to the anticipated fourth wave. If there is a noticeable upward movement, it will likely continue that trend, resulting in a sustained continuation of the third wave without experiencing a fourth wave. Let's now look at the 4-hour time frame. On the 4-hour time frame, we can clearly observe that we already have 5 distinct waves forming in the price movement. First, we start with the first, second, and third items, followed by a brief ABC sequence. Then we proceed to 4, and finally we count 1 through 5 with 5 waves rising upward. Here is the brief and concise fifth wave, as expected, of course. Now my question is whether the fifth wave in this context has fully completed its course. The fifth wave typically concludes with a channel breakout. If this lower channel breaks right now, then it will indicate an ABC correction pattern forming. Continued upward movement indicates a continuation of the fifth wave. If the fifth wave continues steadily, then we will observe the sequence of 1, 2, 3, 4, and 5. This will represent 1 subwave, while the subsequent counts will reflect 2 subwaves, and there will be 3, 4, and 5. This could definitely be one possible scenario to consider. Overall, yesterday I shared a trading idea with you on Instagram and Telegram, suggesting that gold prices might decrease, but there hasn't been a significant breakout yet. Here I have a carefully placed sell stop limit order, and I will be fully ready to sell at this specific price point here. If we successfully create a specific model and then observe a downward movement in the market today, I will be fully prepared to sell my position, placing the stop loss order right here and not above the maximum price point. Additionally, if we transition to the hourly time frame for analysis, we currently observe the sequence of 1, 2, 3, 4, and 5. This represents one complete move. Then we identify an ABC pattern which could potentially signify all of this as 2. Following that, we will draw a channel breakout indicating that this movement will represent 3. This is an impulse, this is a correction, channel breakout 3. And then I'll begin working on the third one, but for now it seems to me that I should focus on completing the first and second corrections before moving on to the third. That's why, everyone, gold is still relevant today, which is Friday. If the market declines today, I will consider selling. I don't see any sense in purchasing it at this moment because gold is already significantly overbought and may not be a wise investment. I'm uncertain about how much higher the market can rise without experiencing some corrections, but I can say for sure that I definitely won't be making any purchases today. I might draw a channel like this and consider buying for the continuation of wave 5 that might happen next week. I'm curious if perhaps some sort of triangle pattern will emerge, and if a triangle does form, it would indicate a price correction, leading to another strong impulse. So we are not rushing to sell gold yet. Yesterday I provided the analysis, but it needs to work on the breakout of the channel. It's not about entering at current levels, as there hasn't been a breakout yet. You see the price is bouncing for now, bouncing. My impulse remains strong. This serves as a correction. Perhaps a market model like this will develop, leading to an increase in gold sales in the near future. So let's move on, guys. Let's look at the next instrument, the cryptocurrency market. What exciting developments do we have in crypto today? Bitcoin? Regarding Bitcoin, I would say that the overall cryptocurrency market is performing exceptionally well at the moment. While individual currencies are experiencing fluctuations, the past month has been relatively uneventful in terms of dramatic changes. However, if you observe closely, you can see how beautifully the cryptocurrency market is progressing as it is steadily growing and consistently adding a small percentage each week, indicating a positive long-term trend in this innovative financial landscape. Here we have the overall structure for Bitcoin's price movement. The first phase is 1 impulse wave, followed by 2 correction waves, and then progresses to 3 and 4. After this, we anticipate a breakout of the channel with an entry point at 5. A stop loss should be placed just behind wave 4, while the target is set above the 3 waves at the 161.8 Fibonacci level. We determine the targets for waves 3 and 5 based on the first wave. This is something I usually explain in my training on how to set targets. Everything is determined based on the first wave. Bitcoin continues to rise, and I will keep holding my purchases. The risk per trade here is 1,296. The risk per trade was, while the profit is 10,200, meaning the trade is almost 1 to 10. Most often, such impulse waves in the market provide this kind of expected return, so we confidently continue to hold our purchases in Bitcoin for potential future gains. Next, the 4-hour time frame. Here we have the initial impulse forming, followed by the second correction, then the third, fourth, and finally the fifth. After this, we have an ABC correction, and it seems that the ABC has likely already unfolded and completed. Additionally, here you can observe that this is likely the first item, followed by the second, then the third, and subsequently the fourth and fifth items. If we consider this as the potential completion of the fourth wave on the daily D1 chart, we can begin to analyze and look for patterns related to the first and second waves that preceded it. Most often, the ABC correction can be the first, second, or third wave, then fourth wave. How do you find the first and second waves? To do this effectively, you should first analyze the higher time frame to determine when the correction has fully completed, and then seek 1 to 2 entry points on a lower time frame. So logically thinking through the sequence, we will have this movement from 1 to 2, and then it will proceed to 3. Yes, 3 hasn't finished yet, then 4, then 5. And here you will need to close and take profit on the 5. In our specific context, HE4 represented the sequence of 1, 2, 3, 4, and 5. This was identified as the ABC correction, which could also represent a second scenario. So for now, guys, let's enjoy the principle of Bitcoin. Everything is stable, everything is fine, everything is going according to our scenario. Ripple, guys. Regarding Ripple, the next instrument is another cryptocurrency that I trade. I don't engage in trading cryptocurrency very often. Instead, I focus on 1 or 2 top-performing instruments that appear to be ideal based on my wave analysis, closely following the methodologies outlined in the book. And here, I believe you can clearly see the specific model displayed on the daily time frame for Ripple. It creates 1 initial impulse, followed by 2 corrective movements and 3 longest phases, not exceeding 1. By the way, take a closer look at the fourth wave when it nearly reached the maximum level of the first wave, bouncing off that point and then continuing to rise upward. That is a breakout of the channel here, moving upwards. Here we continue to hold our buy positions. There was a significant breakout, and we are patiently waiting for the fifth wave. If Bitcoin rises, then Ripple should also continue to demonstrate positive growth and momentum in the market. We are still currently missing the anticipated fifth wave in this ongoing uptrend, which has brought us a profit of $1,000. Now let's take a closer look at the next financial instrument, which is the oil market. Regarding the oil market, I maintained sales activities throughout the entire week this week. In fact, we've been actively holding special sales for 2 weeks now in the oil sector. To truly succeed, it's important to understand that medium-term trading demands a significant amount of patience and discipline. It won't be as simple as if you just jumped in and made a quick profit this week, especially while the market enters a sideways trend and remains stagnant for 2 consecutive weeks, creating uncertainty for investors. Accordingly, you won't make money here. During this challenging period, beginners often begin jumping from one strategy to another in a frantic search for quick results. They then claim that wave analysis doesn't work simply because they didn't manage to make money in such a difficult market. However, they fail to grasp the reality that markets can behave unpredictably and remain volatile like this for extended periods. There is consolidation and a trending market. We earn on consolidations in a trending market. We might experience a slight loss initially or simply sit and wait for several weeks, but typically the 3rd or 4th week tends to bring a noticeable profit. Like with Tesla, today I'll show you Tesla what we expected for 2 months, and in the end it reached the take in just 2 days. So this situation occurs, and it truly feels like a challenging test of your psychology. It's fundamentally about how patient and disciplined you truly are and whether you're genuinely willing to wait out that long period, or if you'll ultimately choose a short-term strategy that brings you financial gains today. However, it's important to remember that engaging in all short-term trades can ultimately lead to burnout and various psychological issues. Ultimately, it will inevitably throw you off balance as it creates a significant and overwhelming psychological strain. Here, the process is more straightforward over a medium-term period. You open a position and simply wait for 2 weeks, thus avoiding potential mistakes and preventing losses. Then, in the 3rd or 4th week, a trend will emerge and you'll make your money. On the daily time frame, the first impulse forms here, followed by the second correction, then the first and second waves. The second wave typically generates sideways movements in the market, so I assume this was the first wave, followed by a second, and then I anticipate there will be a subsequent downward movement. So let's practice patience, much like we did with Tesla. If you're looking to earn here, let's take the time to wait for the right opportunity. We'll patiently wait for market consolidation, then a correction, followed by an impulse, but this process will likely take about 2 weeks. Overall, my comprehensive trading plan carefully follows this specific scenario. 1, 2, 3, 4, counting down on the subwaves to anticipate the anticipated downward movement effectively. Typically, sideways movements in the market are considered corrective waves. That's why I'm holding on to oil sales, but there's not much profit. Look at how our market has moved over the last 2 weeks. I'll provide you with a clear example to help you understand how to effectively trade in the market. Here we experienced an initial impulse wave, followed by a second wave. The correction concluded at this precise point, resulting in a bounce from the Fibonacci 50% level, which is recognized as the average probability for a reversal to occur in price movements. And then, during this time period, the market froze for 2 weeks within this specific structure, experiencing a pattern of down, up, and then down again. We received this correction, which was an impulsive move, identifying this as the second ABC correction. Yes, and ideally there should already be a 3, indicating that the 2s have reached their limit and cannot grow further. The initial impulse began here. The correction is always smaller than the impulse. A correction cannot be larger than the impulse, as per the main rules of wave construction, and from here the third wave of decline should begin. We need to exercise patience during these challenging times. Unfortunately, in this current market environment, it is likely that you won't make any profits. It is essential to wait for a trending market to emerge. We require significant movements and strong trends to capitalize on potential opportunities. But this typically occurs after the market correction has concluded. This week, in terms of oil, has been completely quiet. However, we are not losing anything significant at all. The most important thing is not to lose money in such markets because it's not a trending market. Unlike short-term traders who typically trade on M5 or M15 timeframes, you could potentially lose a significant amount of money here. Numerous consecutive losing trades can lead you to experience tilt, which is a state where you start to lose emotional control and make poor trading decisions. I believe that everyone has encountered that frustrating state when you suffer through 3 to 5 losses consecutively in a single day, and then you begin to lose control of your emotions. This particular state of affairs is specifically brought about by engaging in short-term trading, after which traders often end up losing their invested money. In the medium term, experiencing 5 losses in a single day is quite challenging. You really have to put in a significant effort to achieve 5 losses in just one day. Here, usually you trade for a week or 2, and in 2 weeks you might have 1 loss on 1 instrument. There is 1 week with 1 loss, but to have 5 losses in one day on a single instrument is unheard of in the medium term. That's why it's generally easier for us to engage in trading, as we don't experience many significant losses. Though they do occur occasionally, they typically happen over a stretched period of a month. In a month, 5 to 10 losses in a bad market, for example, but not in a single day. Experiencing multiple losses in a single day can make trading extremely stressful and challenging. It's truly challenging to endure such difficult trading days like these. I honestly can't even begin to imagine how you will trade the next day. Let's move on, colleagues. The next instrument we are discussing is Tesla. For Tesla, we are currently observing the formation of a positive upward trend in the market here. Well done, everyone. Profit amounts to 2,900. For the moment, the financial markets are quiet concerning currencies, and there is also calm surrounding oil. Tesla is bringing in profits, so I'm trying to diversify my portfolio not just with currencies and cryptocurrencies, but also by trading stocks. Because while it's calm and quiet in other financial markets, we can strategically earn on something else advantageous. Here's an example with Tesla. Tesla performed perfectly here. There was an initial impulse followed by the first wave, and then a classic ABC triangle formation for the subsequent second wave. Then take a moment to observe how perfectly the third wave functioned. Tesla's stock has increased significantly by 30%. Guys, take a look. Tesla's stock was valued at 300 just a month ago, and now it's risen to 420. There has been an impressive increase of nearly 30% in Tesla's stock value overall over recent months. All of this can be effectively predicted using the wave principle. You can also forecast which stocks might experience a rise and estimate by how much, not just focusing on Tesla. Any stocks can be analyzed in this manner, but the most important aspect is to have a solid understanding of the underlying trading structure and market dynamics that influence these movements. I carefully choose the best performing stocks that appear more favorable to me based on my detailed wave analysis perspective. Not only what I personally enjoy, but also what appears more appealing through the waves. In general, choose a term that fits well. Many traders often tell me they absolutely love trading gold. Often there's nothing valuable to trading gold today, but these dedicated traders still absolutely love trading gold. Naturally, they will actively search for an entry point. I always say it's far better to trade what appears promising and favorable from the perspective of wave analysis. It's quite evident that we are dealing with a trending market, and it's advisable to explore trading in various markets. However, ensure you focus on your preferred trading waves, not solely on your favorite gold. Because, as you can clearly see, there's not always something particularly interesting going on with gold, but recently there was an intriguing setup with Tesla. We worked it out, but it took 2 weeks to wait, so congratulations to everyone. Just so you know, I'm planning to finalize the Tesla closure today. Now that the market is beginning to open in America, I will likely secure some profits here, because when considering the previous trends, the first wave was the longest one. However, it's important to note that our current third wave is also regarded as the longest in this context, which adds complexity to the situation. But in principle, a market correction might begin, and then we could experience a subsequent upward movement from that correction. So I will probably close Tesla. I gave the market ample time to develop and grow after the Fed's decisions, but as you can clearly see, the market did not demonstrate any substantial growth, and we did not respond to the ongoing upward movement. So Tesla will probably close at 2,900, and that will be enough for this instrument. We will await a correction. All right, everyone, the final instrument we have to discuss today is gas, which plays a crucial role in various applications. Examine gas closely. Colleagues, I provided you with a trading warm-up at the beginning of this week mentioning that I purchased natural gas. Here we successfully formed our first impulse wave, experienced the second correction, and then broke out of the channel to buy. The purchase was beneficial and most likely due to the latest news from the Fed that was released. The market subsequently turned down. I don't know if the stop loss will work here or not. I have a stop set here. Regardless of the outcome, I am prepared to take that important step forward. I manage my risks. Of course, it's a bit disappointing that gas didn't go as planned, but overall, it was a good entry point. There was an immediate reaction to the rise, but then some level, and the news prevented us from reaching my take profit. The market experienced a turnaround and declined, but overall, this behavior is typical. It's an integral part of trading, and once again, resilience is crucial. You know, arguably the most important quality that a successful trader must possess is resilience in the face of challenges. It's extremely important for traders to remain resilient, meaning that regardless of how many losses they encounter, they must stay focused, maintain their composure, and continue diligently performing their job effectively. I may still face gas losses now because I see not everyone is resilient. Many people tend to panic and feel anxious when they notice they have experienced 3 to 5 losses in a row in a competition. They begin to feel overwhelmed, panic sets in, causing them to change their strategies and alter various aspects of their lives. While this represents a relatively brief period of just 5 losing trades or 10 losing trades, it is simply an unfavorable phase that will eventually come to an end, leading to the anticipated uptrend. And you'll begin making profitable trades that should ideally cover your losing trades at an effective ratio of 1 to 2 or even 1 to 3. Overall, financial losses are an inevitable part of trading and they will always be present in the market. Stress resilience is an incredibly important quality as it allows you to remain calm and focused during a period of drawdown that can last for weeks without generating any income. This is precisely how it occurs in the medium term. Like in the currency market, we are trading currency now, but absolutely nothing. We bought and sold. 2 weeks flew by and we earned nothing. Tesla gave us growth, we earned on Tesla. We've been sitting on oil for 2 entire weeks now, and while we are unable to earn anything yet, we are fortunate that we're not losing anything either. That's good. Everything is great with cryptocurrency. The market is gradually growing. Here, I believe we have the opportunity to earn. It's not always the case that every investment yields quick returns. No, you will have to wait. There will be drawdowns and losses. This is part of trading. And those trades that initially went into profit can ultimately turn into unexpected losses. Yes, such trades will inevitably occur. While they are indeed unpleasant and often discouraging, you must be able to accept this reality. It's crucial to understand that you will not find a trading strategy that guarantees only profits without encountering any losing trades along the way, as losses are an inherent part of the trading journey. Such a strategy does not exist, so not everyone earns, and it all depends on your psychology and what you will do in each situation. So everyone, I'd like to remind you that we have a private channel dedicated to sharing daily wave analysis along with my detailed analytics, which you can use for your trading strategies. The detailed analytics encompass various entry points, key stops, and specific targets, enabling you to enter the market at an optimal price. Most often, trade reversals will typically close either at break-even or with a modest profit, which is quite different from those who entered this market to buy, for example, at that point. Overall, the analytics will give you an understanding every day of how the market has changed over the past 24 hours, because many still trade based on Tuesday's analysis from the live stream, even though everything has changed by Thursday and we have already started working on different trading scenarios. It's crucial to diligently monitor these scenarios as they evolve over time, because doing so will enable you to trade effectively, identifying the optimal entry points for your transactions. You will not be entering the market at a late time. If you're interested, you can message me on Telegram or Instagram saying you want wave analysis, and I'll provide you with the subscription rates for wave analysis. There are plans for a month, 3 months, a year, and a lifetime. The plan is intriguing for our team. You can message me and I'll provide you with the rates.